Well, welcome back, everybody. So next in our agenda is a panel discussion. Topic being growth prospects for GCC investors in the UK 2021 and beyond. May I please ask our audience to kindly ask lots of questions. Our panelists have lots to share with you. Do ask your questions and let's maximize the time that we are spending together. So just like to welcome the gentlemen who have just joined us. Our panelists for today are Professor John Bryson, Professor of Enterprise and Competitiveness at Birmingham Business School, University of Birmingham. Matthew Hurn, OBE, Executive Director and CFO, Disruptive Investments, Mubadala Investment Company, and Gavin, Holland, partner at Anthemis Group. Well, gentlemen, you're very welcome. And I would like to start this session by asking each of you to maybe just say a few words about yourselves and your organizations and relating to the topic, what we're talking about on growth prospects for GCC investors in the UK. You're welcome. And may I start with John?
Yes, so I'm John Bryson. I hold the chair in Enterprise and Competitiveness and the chair in Economic Geography at the University of Birmingham. Now, the University of Birmingham has its feet in many different camps. So we have our main campus in Edgbaston, but we also have a campus that's arising out of the sands in Dubai at the moment, which will be opening later on in the year. So that means the university, we have to think as if we're European, but we also have to think as if we're within the Gulf states, because we are in the Gulf states. My research area is also all about understanding local economic development, focusing both in the UK, but the US, Europe, and to some extent in the Gulf states, working on areas which will create wealth, create jobs, but also areas that are in decline. And some of my current projects are on things like the space industry and specifically applications that are coming through satellites, because a lot of our lives are determined by data flows that are coming through satellites, so a huge market area, but also issues to do with the restructuring of financial services in the City of London post-Brexit, and current work on sustainable fabrics, because if we're heading to a decarbonised world, a lot of our fabrics have within them petrochemicals. So a significant growth area are going to be non-petrochemical solutions to fabrics. And all of us wear clothing, so there's a massive market there in alternatives to petrochemical-rich fabrics.
Wonderful, John. And Matthew, would you like to say a few words about what you're doing? I know your company is doing some excellent things over here at the moment. So maybe you want to just spend a few seconds to tell us a little bit more about yourself and what you're doing.
Sure. Thank you, Ed. Good afternoon, everybody, and thank you for the opportunity to take part in today's session. My name is Matthew Hurn. I'm the CFO of the Disruptive Investment Platform within Mubadala Investment Company. For those of you not familiar with Mubadala, it's actually an investment vehicle that's owned by the government of Abu Dhabi. And effectively, we serve a multiple aspect. Really, we're looking at making long-term investments for financial return, but we've also historically looked at actually sort of enhance the social fabric here in the UAE. I think I've been here now for nearly 14 years. And over the last few years, have been taking a more proactive lead on deepening the commercial and economic relationship between Mubadala, the UAE, and the UK, which I'm sure will be flushed out during the course of today's session.
Fabulous, thank you. And Gavin, if you just want to talk a little bit about yourself and your organization.
Absolutely, thank you, and thank you for the invitation, and thank you everybody for attending. Gavin, Holland, I'm a partner at Anthemis Group. For those that don't know us, we're a UK headquartered but global fintech focused venture capital fund. So over the last 10 years, we've made more than 100 investments, and delighted to come to this panel for reasons that I think will become clear as we get into the topic. But we've already built some fantastic relationships across the GCC. I think we have approaching 10 investors into Anthemis across 4 of the GCC countries. So some good experience, some good tips of things that we've seen work and work less well, and excited to join the session and start the dialogue. So thank you.
Fabulous, thank you. Now, John, let's start with you. Actually, why is the UK such a favoured location for investment from the GCC countries? Why is it so? What is the attraction? Because seems to be lots happening even in these times. Do you want to maybe get us started on this?
Right. So let me give you a slightly odd answer to that question, I think. So the UK has a long history of attracting foreign direct investment from across the world. And it tends to be up there in the league tables in terms of European countries that attract foreign direct investment. If we're thinking about London and its emergence as a global financial centre, there's one reason why London became so important. In fact, there are two reasons. One is the emergence of the Industrial Revolution, the British Empire, all of those trading links that emerged from the 18th century onwards. But there's something actually more important than that, and that is the legal system that exists within the United Kingdom. So in comparison to European countries, the UK has a very distinct and odd legal system. So in Europe, it's a civil law system in which legislation is all based on written law. Everything is written down, everything is prescribed, everything is carefully worked out in terms of what you can do and what you can't do. The UK system is odd because it's based on common law, and common law is shaped as the society and the economy innovates and emerges. So what tends to happen within a civil law system, civil law tends to legalize out innovation. Within a common law system, innovation is permitted, and then the legal system then catches up. So what you have is a very, very different dynamic innovation ecosystem. So why did London become a global financial centre? Well, partly to do with trading links and the 18th and 19th century, but a lot of this is about the common law system that permits and enables innovation. So if you're wanting to understand why the UK has been such an innovative country, it's not necessarily that great at commercializing. So it's really good at inventing things, and then other countries tend to commercialize them. Part of that innovation comes from that common law system that doesn't legalize out innovation before it happens.
Right. Matthew, do you have a view on this as well? I mean, what's attractive about this place for you as an investor?
So I think we kind of look at it into longer term and shorter term. So if you go back, actually between particularly the UAE and the UK, there has always been a very strong bond and connection, friendship between the respective ruling families. And therefore, for many of us in this part of the world, we view the UK as a second home. But I think we've all been used to doing business in the UK, availing of professional services. So many people go to the UK to avail of banking support, professional services, lawyers, etc., without necessarily having as much invested in the ground as you'd expect. Now, if you take where we are now, I think that landscape has changed, and it's changed because of two reasons from an investor perspective. Firstly, you now have a government with a significant majority. So if you go back over the past decade, 12 years, actually the government hasn't had that strong majority, which gives you the comfort that actually you're talking and building relationships with ministers that have longevity. The second most important part as well for us now is the Brexit overhang is gone. Irrespective of whether you believe Brexit was a good idea or a bad idea, that uncertainty was not a good environment for potential investors. So with that overhang now gone, it's very clear that actually you know exactly sort of the economic landscape in which you're playing. And lastly, I think the UK government has been very clear, particularly in the last manifesto, as to what areas of the economy are really important for them to actually invest in. And if you take the respective trade agendas of the UK and the UAE and you were to look and dovetail them, you'll see there are many areas of commonality, which we can talk about later. But I think those three things right now really give you the opportunity to say, okay, the opportunity now to make significant investment in the UK in a meaningful way is probably more relevant, pertinent, and attractive now than it has been for many years.
Yeah, fabulous. Gavin, you have a view on this as well?
Yeah, I think I would answer it in two different ways. One, in terms of what do we have in the UK that's particularly attractive for investors from the GCC, but I would equally look at the other way around. So to the first point, I think there are many sectors that the UK leads the world, and selfishly, in terms of the work that we do here, fintech is clearly one of those. UK is fintech capital of the world, unquestionably. So I think that's one example. There are other industries where that is also true. But I think to the second point, and I think this was embedded in what both Matthew and John were saying in terms of the historic depth of relationships, there's such a bond between the UK and various countries across the GCC that make it much more interesting for people like us and our portfolio companies to want to have investors from the region, not just for the capital, because you can get capital from pretty much everywhere in the world, but actually because of the depth of these long historic relationships. And I'll not create a list of where we don't want to build these relationships in other geographies, but I will say that in the GCC, we really enjoy, and our portfolio companies really enjoy, getting into these discussions about what comes after the check. And there's a lot of work that we do and our companies do around knowledge transfer from the UK to the region, partnerships between the UK and the region, and even more broad collaboration around building local fintech ecosystems in individual countries. And I think that wouldn't be possible without everything that John and Matthew said in terms of the depth and the bonds between us and the region. So I think you can look at it both ways, and it really adds up to a powerful partnership.
Sure, excellent. There have been some macro events happened recently. I mean, in the UK, of course, we mentioned Brexit, and there's the COVID, which we're trying to still get through. But thankfully, it seems maybe things are getting a little bit better. I mean, how has that sort of impacted in investor appetite in this place? I mean, how people view in investment climate in the UK at present? What's investor confidence like? Shall we start with John? John, do you want to start with this one anyway?
Well, I think we've known for the last, 8 to 10 years, if not longer than this, and I'm sure Gavin is going to be more experienced at this than me, in terms of the shortage of grade A investment opportunities. Finding an investment that will give you the right risk return profile is really quite difficult. So they're in short supply. The UK has a number of significant opportunities. So if you forget about Brexit and you forget about COVID, investors are searching for those opportunities wherever they might happen to be on this planet. The UK has a number of advantages: English language, the long-term stability of the political system. It's a governance system that has 1,000 years of history, and of course now in a post-Brexit environment, it has the ability to be rapid in its decision making. So irrespective of which government it might be in power, you don't have the constraints of having to have things cleared to the European Commission and various decisions that might need to have gone through the other EU member states. So the UK is able to work out its own strategy, and if the UK government is behind a particular decision, make a really rapid decision. So something can happen within weeks or months rather than years, perhaps, or you might be in a situation within certain EU discussions where 2 to 3 years of discussion might occur before a decision is made. So,
of course,
significant investment opportunities, of which perhaps the key one for all societies is decarbonisation, because the decarbonisation agenda changes everything, all lives, all livelihoods, and that's going to unfold over the next 5 to 10 years. I think in a much more faster way than we might imagine. So that has implications for property investment, it has implications for logistics investments, it has implications for investment into infrastructure.
Right. Okay, thank you. Now we have, I think we should maybe just take a couple of questions from the audience. And we have a question, which is aside from commercial real estate, which UK asset classes do the panel see as being attractive to GCC investors? This is from Mark Mortimer. Who would like to maybe take this one on anyway? Matthew, should we come to you on this one?
Sure. In fact, I think there are many asset classes other than commercial real estate which are particularly attractive. So from my side, I've been leading an initiative to really kind of look at the sovereign investment partnership, and we've announced a significant investment into the UK of £800 million into life sciences. Now, the UK, through the world-class academia we have in many universities, such as the one that John's at Birmingham, are producing some of the most innovative advances in life sciences. And when you start looking at drug discovery, drug development, medtech, digital health, real, very capital-intensive, IP-intensive businesses that actually need growth capital. And I think there's a huge opportunity there. I think Gavin mentioned fintech. London is undoubtedly fintech capital of the world. It's probably getting a little bit crowded now, but there's also software as a service. There's sort of technology advances in transportation. But I think the other two ones that are really important, if you listen to what the UK is talking about now, one is infrastructure and the whole levelling up message. That the UK is far more than just the City of London. And actually, if you start looking at the levelling up and what you're seeing, some of the developments into the northern powerhouses, up into Teesport, where there's a new sort of free zone, into areas all around there, there's significant infrastructure opportunities. And that could be physical infrastructure, but it's also around data storage, it's around broadband connectivity that give access to the UK population. And the final one, which I think is really pertinent given the timing, is energy transition or net zero. Obviously, the UK will host COP26 later this year. It's starting to already at the G7 talk around advances and commitments to sort of get to net zero. And if you look at things around energy storage, electric vehicles, there's so many opportunities there. I think the key part for investors into the UK is to trying to navigate your way to those sectors. And I think your previous panel were talking about accessing kind of the role of the Business Council. I'd say the same for kind of Her Majesty's Trade Commissioners to really make sure that you're getting the connectivity that you need.
Sure. Gavin, do you have a take on this as well?
Yeah, I think just a short extension to Matthew's point, which I want to agree with in terms of the crowded nature of certain parts of fintech, and then agree with his other point in terms of needing some sort of intelligent guide towards where the real opportunities are. And I think this is always difficult when you're from a different region, from a different country, looking at opportunities in any country, whether that's UK or elsewhere. You don't want to be the person or the people that come late and are shown towards the things that everyone else has passed on that sits within a 1 mile radius of where the company is. And so, I would agree with Matthew that there are some sectors or subsectors within fintech that feel quite like that right now. They're a little bit dated, a little bit overcrowded, valuations are quite high. And so, I would encourage people to, whether it's us or others such as UK DIT, who I think do a fantastic job, navigate towards where the new emerging areas are. And I think there's a lot of work that people, not just in the UK, but including the UK, are doing around embedded finance. So thinking about how you make the financial services user experience invisible in the user experience in other industries, whether that's healthcare, media, clean tech, or others. And I would say especially UK is doing some significant new groundbreaking work around green finance and sustainability. And I think, given my earlier point around the warm relationships with the region, I think there are some really good opportunities for GCC investors to come find those emerging areas and actually lead the world of taking them to the next place beyond the UK, rather than the US being a natural destination to go next, for example.
Fabulous. We have another question from the audience, which is, to what degree does this drive for UK-bound investment starve GCC businesses of the cash flow needed to expand and diversify? So you invest over here, do you starve opportunities out there? Shall we start with John on this one anyway?
So I'm not sure I fully understand that question. So these are...
Yeah, sure. It's like... Sure. As to what degree does this drive for UK-bound investment starve GCC businesses of the cash flow needed to expand and diversify?
Yeah, I suppose the key thing here is going to be identifying the right investment opportunities so that you're then able to put in the right investment case behind it. So there are those that are relatively low-hanging fruit, but the low-hanging fruit investments will tend to be those that are already highly competitive. So the longer term rate of return is going to be minimal. So what you then need to do is go for some of the more higher risk investment opportunities, which you're probably going to have the capital in place yourself, or to have some really well established relationships with providers of that capital. So within, say, for example, a sovereign wealth fund environment, sovereign wealth fund, a lot of the investment is going to have to be in relatively secure investment asset classes, but a proportion of it should be in relatively high risk. Now, a lot of that high risk may be written off because it fails, but that which succeeds will probably give you the top slice of what's going on with it within that fund. So investing that which is currently not popular, but may become transformational within the next 3 to 5, 10 years. So a good example of that is there's a company in Austria that produced a major innovation in a particular fabric about 15 years ago, and it dominates the world in terms of sustainable fabrics. So if you'd invested in that early on, you would have had a significant return on your investment. But doing that 15 years ago, who would have known that that company would become so important?
Excellent. May I just ask our panelists, like, what advice do you have? Like, if somebody wants to, or we've heard like the UK is an excellent place to invest. Like, I want to get involved, but you don't know anything about it. I know you're experienced investors, but what are the steps? Where do you start from? I mean, who can you consult, or where can you get information from for opportunity sectors in the UK? Matthew, can we start with you on this one?
I think there are many, Ed. I think that you've got business councils who play a really critical role. I think you've got the Department of International Trade who have representation in most countries who can help you navigate that kind of landscape. I think in the UK now you've got your various subgroups. Obviously, we're dealing a lot with the newly created Office for Investment, which is within number 10, to try to encourage inward investment. So I think there's a plethora of opportunities. I think you just need to actually try to be very specific in the ask. You know, the UK investment landscape is huge. I think if you can work out where your risk appetite is, your investment appetite, and hone in specifically on the question, you will actually get very detailed answers. But I think through those channels initially are probably going to bear the most fruit.
Right, Gavin, yourself, what advice would you have for someone looking to invest in the UK?
So I would echo many of the names that Matthew stated, but equally add, I suppose, our own name and various others like us that have experience in the region and care about these relationships that we already have, and have a vested interest in ensuring this long-term collaboration between the two regions. And so, I don't think it's hard to find people, trusted people through people that you trust, who are prepared to help and engage and see it as a very sort of two-sided equation. I'm sitting here seeing some excellent opportunities to engage for us, but also our portfolio companies with thoughtful investors from across the region. So I don't think you'll struggle to find people to trust that have some view and are able to guide you towards the right places.
Right. So to wrap up, the investment climate in the UK is still very positive for investors looking to come in. And would that be correct in saying that? And that the recent events haven't really dampened it a lot. If anything, it could be even more positive, perhaps.
Yeah. So
John?
Maybe if you don't mind me just adding a small point to that. On your earlier question, which links to this around sort of the big macro themes, I'm the person that speaks to people for the first time from inbound calls into Anthemis, and the last 12 months have not heard a single question about Brexit. As Matthew said, Brexit, yeah, whilst there's still a lot of work to do, investor confidence has moved on from that. So that's less important by a long stretch. And your point around COVID, this has really fueled digital transformation across multiple industries. It's creating huge opportunities for businesses and investors to build new business models and accelerate things that otherwise might have taken decades. And so, yeah, whilst these things have been very painful for all of us and created a lot of constraints and heartbreak around the world, they are, from a business perspective, driving digital transformation. And that's true in fintech and it's true in other sectors. And I think the UK is lots of opportunity in all those sectors.
Fabulous. John, any wrapping up words for us?
I think there are all sorts of interesting things to think here, and especially post-pandemic. So Gavin's perfectly correct in saying that the pandemic has accelerated trends that were already happening. And it's also placed other tendencies to one side, like decarbonisation, because the government has been focusing so much on the pandemic. But if we think about what the digital transformation has done to industry, it's altered London. So London suddenly stretches itself out further than it's ever done in the past. So what you're seeing in, say, cities like Bristol, significant inward investment going in right the way through during the pandemic for new office buildings, targeting companies that would normally go to London. So what will happen is you'll have most of your office workers in Bristol, and you will have a smaller fronting faced office in downtown London. So the geography of the city changes, and then linked to that is hybrid working. So hybrid working and working from home, that's going to be with us for the foreseeable future. It's probably a new part of our labour market. But working from home doesn't necessarily mean working from home. So it may mean that you're working in some sort of co-working space close to home. Now that produces an interesting opportunity for new forms of property development, where you're providing those temporary spaces that you rent by the hour or you rent by the day. So you're not in downtown London in an expensive office building. You're not working from home because you don't necessarily want to be working from home, but you are in a social environment that may not be owned by your employer. So a whole series of interesting opportunities. London becomes London plus Bristol, London plus perhaps even Birmingham. So Birmingham becomes the outlier of London, especially with high speed too. And then your home has linked to it a co-working space that you may use a day a week, 2 days a week, 3 days a week.
Fabulous. Thank you. And Matthew, last word from you as well.
I think hopefully there's a sense that people get from this panel that the UK is open for business, and I think the uncertainties that we've seen historically have gone. I think the legal system gives investors great comfort. The quality of education and talent is also reassuring. And actually, if you think of it now, the pound is still relatively weak. So actually, that cost inbound relative to the dollar or the GCC currencies means that initial investment cost is probably even more attractive. But I think one thing that Gavin emphasised, I think I want to finalise on, is it's not a one-way relationship. The relationship between the UAE and the UK or the GCC has been very strong. So whenever investments are made, I think it's always looking actually at creating those partnerships with businesses who actually will be very keen to partner on a long-term basis, maybe bring some of that knowledge transfer back to this region, because we're all trying to build out the various parts and the various pillars of the economy here. So we've got a robust, dynamic and vibrant economy. So if we invest in sectors that we know we want to bring back here, this really is part and parcel of a two-way relationship. And I think actually, if we look forward, it's just going to go from strength to strength.
Yeah, wonderful. Thank you so much, gentlemen, for giving us the time and sharing your views on this. It's an excellent panel, especially as a lot of this conference looks at what's happening in the GCC and investment opportunities. And I know we do have a lot of, if you like, investors in the from the region joining us today who are interested in what's happening. So thank you for sharing your insights.